welcome to Money9. This is a very special panel that we've put together for you. We've brought together some of the sharpest minds, economic minds, journalistic minds, people who have covered the budget for decades. They've analyzed it, they've brought it to their viewers. So we thought we should bring them all together on this platform to decode what is supposed to be a once-in-a-lifetime kind of a budget. That's the expectation. And we'll try and understand from this esteemed panel what they feel Finance Minister Nirmala Sitharaman could do in the next 50 minutes when she starts laying the budget on the floor of the Parliament. Let me introduce the panel very quickly to you. Rakesh Khar, who's the editor of Money9. He's the man of the moment who's just pulled off the launch of a channel during a pandemic in record time, and I'm going to get a little bit more about that from you, Rakesh, before we start decoding the budget. There's Nalin Mehta with me, a veteran journalist who's now the dean at the School of Modern Media. There is Yatish Rajawat, who's a senior journalist. K.A. Badrinath, again, a former editor and a senior journalist. And of course, there is our very own R. Sridharan, who is the editor at TV9 Kannada. Thank you very much, all of you, for joining me here. Rakesh, first question to you. What is Money9 all about, and what is your feeling from this budget that you're getting?
Thank you, Vivek, for being a fellow passenger on this remarkable journey. We made a modest start. We're just 3 days old, and it's our first budget. And what's interesting is that, even the finance minister says that there are going to be several firsts to this budget. So our first budget, on the eve of several firsts that are going to be in the Nirmala Sitharaman budget. Money9, is India's first multilingual personal finance platform. I keep saying this, that it's a service. It's not as much a business news platform. It's a service. Because our core editorial agenda is to bring about financial inclusion of 130 crore Indians. When I say financial inclusion, it means financial independence. Financial independence translates into economic independence. Economic independence translates into Atmanirbhar Bharat. That's the stated objective of the entire ecosystem that we live in today. So that's the macro sentiment. Coming to the budget, I think my first fervent plea to the finance minister would be, please lay out massive budgets and allocations for financial literacy. If we are financially literate, we all, bring about this Atmanirbhar Bharat as I just outlined. That's the macro sentiment. On the micro science, I think it's important to draw two sentiments. हिंदी में अगर हम बात करें तो दो भाव प्रबल हैं. सबसे बड़ा भाव है अभिलाषा. अभिलाषाएं अनेक हैं और नेक हैं. ये नए भारत की अभिलाषा और भी उत्तम है और सर्वोच्च है. सिमिलरली दूसरी जो भाव है वो है आवश्यकता. अभिलाषा के साथ आपका एक विरोध हो सकता है कि क्या हम तैयार हैं, और अभिलाषा और महत्वाकांक्षा के बीच में क्या एक पतली लाइन है. लेकिन आवश्यकता को लेकर हमें बिल्कुल कोई कंफ्यूजन नहीं होना चाहिए. आवश्यकता निजी है, आवश्यकता अनिवार्य है. तो मेरा वित्त मंत्री से ये निवेदन है कि आम आदमी के लिए जो कोविड से बुरी तरह से हर्ट हो चुका है, उसके लिए उस आवश्यकता का वो निवारण करे, उसको एक समाधान दे जो सार्थक हो और जो ड्यूरेबल हो. एंड ऑब्वियसली बजट एक आंकड़ों का संग्रहालय है. उन संग्रहालय के बीच में जो आंकड़ों का एक गलियारा है, उसके बीच में एक जो आंकड़ा जिस पे आम आदमी की नज़र लगी रहती है टिकटिकी की तरह, वो टैक्स वाला बजट. तो अब चूंकि जीएसटी आया है, इसलिए डायरेक्ट टैक्सेस पे ये ज़्यादा नज़र रहेगी. तो हम आशा करते हैं कि वित्त मंत्री हमारे इस पहले बजट Money9 में आम आदमी की झोली में इतना ज़्यादा डाल दे कि सब प्रसन्न हो जाए, और वो जो हमारे प्रधानमंत्री ने कहा, अच्छे दिन शुरू हो जाएंगे.
Okay. Well, that's what we're going to chat a lot about. What is it that she can do? But my first question to all the panelists, since all of you have probably, the least I could count was maybe at least 30 budgets each, maybe many, many more for some of you. But have you seen the expectation in a manner that this could be probably the toughest budget for any finance minister in your the history of which you've been covering budgets. I'll go one by one to all of you to get that sense, because it comes in the wake of a crumbling economy thanks to the pandemic. Expectations are high, as Rakesh mentioned. We all, the salaried, the middle class, want tax cuts, benefits, but at the same time, the government needs to spend its way through this crisis. So it is a pretty tough situation this finance minister finds herself in. So let me get a quick comment, first of all, from each one of you. Nalin, you go first.
Thanks, Vivek. Firstly, I just wanted to say that maybe covering 30 budgets may not be the best qualification in today's day and age, when everything is the certitudes of the past are over. So it's a new world. So also I'm wearing a tie which puts a target on my back for the millennials. So and before I answer your question, I wanted to congratulate Money9 and Rakesh. Rakesh is a veteran of many media launches. Yes. We were talking before we went on air, and this is the shortest period for a launch he's ever had. He's done very, very big brands before, but to get this up and running in this record time, so congratulations to you, Rakesh.
Thank you, Vivek.
On the question of the budget, Vivek, substantially, I think you're right. This is a very important budget. I think for the Modi government in particular, this is probably even more important than the first full budget they tabled in 2015. The reason for that, of course, is obvious because of the devastations of the coronavirus and what that's done to the economy. But more than that, even before the virus upended everything as we know it, there were serious structural problems for the economy. And those linked, those were from growth to double finance sheets to exports slowing down. So there were structural issues which the government has to address. And therefore, as a vision statement, as a new testament to what Modi 2.0 has for people, and Rakesh has already put his expectations on the table. Therefore, this is very important. From a long-term point of view, even more than the budget, what I am looking forward to is for the long-term view of the economy, the 15th Finance Commission report. Because at a time when you have farmers' agitations around you, you have debates around cooperative federalism and all of those things, what the Finance Commission does, and we all have some sense of, depending on some tidbits here and there on what it does, the last Finance Commission, as you know, put 42% that ceiling between the states and the center. So what this Finance Commission does, I think, on that, and that plus 1% say, that I think is very important in terms of the larger optics of cooperative federalism, of the share of resources between the center and the state. Also, I think it's fundamentally important at a time you are in an economy where you have a structural challenge, and the IMF report was very good because India is expected to be to rebound back faster than other developing countries in the next year. But beyond that, you also have a serious challenge on the border from a political point of view, and therefore the Finance Commission becomes very important in terms of its suggestions for a non-lapsable defence fund. Because defense funding is a real structural problem. So if you go to a non-lapsable fund, that also has a direct impact not just on defense, but on debates on how do you share this money. Because if you put inside a non-lapsable fund, which as is being suggested, then the larger pie which gets divided becomes shorter. Become smaller. Now, of course, the argument in that is that it's a national responsibility and so on, but some states are objected to it. And therefore, I think the Finance Commission from a long-term economic point of view is equally important of what the report is saying and the debate around that as the budget itself today. And the budget, of course, is fundamentally important for the new growth part for this economy after the problems with the coronavirus and what that's happened.
Sure. Let me go across to Badri. Badri, if you've been listening in, my question was, do you believe this could be among the most, of course it is the most anticipated budget in recent times, but also the toughest for the Finance Minister?
Yes. Yeah, as the Finance Minister herself said, it could be once in a lifetime kind of a budget that she's looking forward to present. And second part to the commentary from the official circles is the part that yesterday the Prime Minister has talked about, the mini budgets that were unveiled in the last 4 to 6 press conferences during the COVID pandemic, when she has rolled out a lot of measures, both on the fiscal front as well as the social front. So, and he thinks that as the Prime Minister said yesterday, that it is part of a string of taken during last 1 year, and it would be only a continuation of what we have done in the last 1 year on the economic front. So my guess is perhaps we need to moderate our expectations from the budget as such. Second part is that continuation in what has been done in the last 1 year, both on taxes front or the money front, which is being distributed around for the vulnerable sections, and also the part that we need to be more realistic in terms of our expectation. But yes, from medium to short, long term, what is the vision this government presents for the economy? It will be very significant. For that, I would bring in only two issues. One is the IMF's projection, which our co-panelist has, rightly mentioned. They're talking about 11% growth the next financial year. Second part is also the independent consultancies have talked about already the stock market sitting about 2.7 trillion. Third is in one of the interactions with the CEOs of global companies at the World Economic Forum, the Prime Minister talked about infrastructure pipeline, where he proposes to invest about $1.4 trillion by 2025. If all these three are seen together, my guess will be that capital spending will be the focus of this budget. Of course, you may have to give some relief somewhere to some sections who are seriously hit. But the elbow room is very limited, I'm afraid of. That's what seems to be the sense.
Absolutely. Let me get the opening remarks also from the other two panelists. Sridharan, what are your thoughts on going into this budget?
So Vivek, you mentioned that this is probably going to be the toughest budget. I agree with you. The last, major event which shook the world, to my mind, was 2008 financial crisis. And in 2009, that's what everyone was looking forward to. What is the finance minister going to do in terms of protecting the Indian economy from a global contagion? But now what we're dealing with is a biological contagion which has reset the world in fundamental ways. We heard about new normal back in 2008, 2009 in the wake of the Wall Street contagion. But I think the reset that's going to happen now is far more fundamental in the way businesses are going to operate in terms of people's risk perception. What are people going to do in terms of the investment? So this is going to be a far more fundamental shift in how humanity lives going forward. So this is going to be a far bigger challenge. Just to give you some examples from Karnataka, there's been a huge hit that the small and medium industries here have taken, including service sector, which includes restaurants. I am told by the Restaurant Owners Association that at least 30% restaurants in Bangalore have shut, and many of them aren't going to come back. So this anecdotal evidence repeats itself even in the case of SMEs, where people who manage to build a company doing a revenue of 10 to 15 crore, 20 crore, they have been simply put out of business. And the entrepreneurs who have taken a hit because of this unprecedented global event are now mired in debt. And they're not sure if they can ever come back to being an entrepreneur. So Vivek, what is really at stake here is the animal spirits of the economy in terms of people's faith and their ability to take risks going forward. So now, is this something that the finance minister can address in a single budget? Obviously not. But I think from a signaling point of view, I think what the finance minister needs to do is to say that, okay, the government is behind you. Maybe this year we're not going to worry too much about fiscal deficit. We're going to create the environment for growth and give you an enabling environment where you have a chance to come back and do what you were doing earlier, which is to create wealth, create jobs, create innovative industries, organizations. I think that is the key thing that the finance minister ought to be doing, because we know that the room for her to do anything from a taxation point of view is very limited. More than 80% of the government's revenue comes from corporate tax, income tax, and GST. And now GST is completely outside of the finance minister's purview. It goes to a GST council, which decides on the rates and they agree on the share, and then it comes into some sort of a law. So the room for the finance minister is very limited. But the good news is, when it comes to India, we tend to be too pessimistic when bad news hits us, and we tend to be too optimistic when we get a slight bump. But I think India is a very resilient country and it's a very resilient economy, and we tend to underestimate the strength of our entrepreneurs, our workers, our farmers, our service sector people. So I think everyone is talking of a V-shaped recovery. So today, the finance minister has to step out and say that government is solidly behind you. We will do whatever it takes to get the economy back on track, to create the employment which has been lost due to COVID. And we are here to help small entrepreneurs, medium enterprises to get back on their feet as quickly as possible. So if the finance minister does just this, I think in terms of signaling, in terms of instructing the banking sector to go out and support industry, I think her job would be done.
Yatish, your opening remarks?
Vivek, I look at this budget in the context of the 3 Rs. There is a need to reinforce resilience in the economy. There is a need to give impetus to recovery. And there is the third R, which is resurgence, wherein the finance minister needs to put pressure around schemes which either benefit people directly, like the Pradhan Mantri Kishi Samman Yojana, which, as you know, has become the largest scheme. It overtook Manrega last year. Manrega is around 65,000 crore, and PM Kisan is now 75,000 crore. So if we talk about the largest scheme, that is a scheme which will get a little more attention, particularly in today's climate. So recovery, resilience, and resurgence. These are the 3 Rs which I think the finance minister will focus on, and the way she will focus on, because there is now most economists and most people have accepted the fact that fiscal deficit is not the concern or not the attention which needs to be paid. It is expenditure which is important. So where will expenditure therefore take place to ensure that these 3 Rs happen properly? The resilience part, as we know, is largely the banking sector and corporate sector. The recovery part is spending, consumption, and demand. We've seen a recovery of demand to a certain extent. The supply chains have come back, so supply is back at moderation, but there is still a lot of capacity which is unutilized. So the corporate sector will be looking at incentives, particularly the PLI incentives. How much does the finance minister allocate for the PLI incentives? As you know that in the last 9 months, there have been multiple announcements. All those announcements have to be justified either with allocations or with reporting that what has been done. And Nirmala Sitharaman has been continuously in each successive press conference telling people about what has been done from the last announcement. So I'm hoping that a conclusion of all the announcement will also happen during her budget speech. I also hope that some of these sectors, and particularly the informal sector, we tend to ignore it, particularly in our budget coverage, especially among the pink financial dailies, which some of us have worked for. See, 86% of the employment is still in the informal sector. And that has been the worst hit in the pandemic because, one, they don't have savings. Second, they are mostly wage earners. And third, they are the ones which constitute the so-called migrant labor economy. Hence, the government had announced two very important schemes during the pandemic. One was the Pradhan Mantri's Swanidhi scheme, which had a smaller allocation. And I'm hoping that that allocation will substantially go up in this announcement or in this speech that the finance minister makes. There are other areas where the investment needs to happen. I mean, Sridhar and others talked about the infrastructure part. The PSC policy has been already announced, so we'll hear something more about possibly a roadmap of disinvestment. Uh, so, to sum it up, we must focus on the resilience part, on the recovery part, and the resurgence part. Uh, Unlike the past, when we used to focus on the deficit part or the tax part, or what the government is giving to taxpayers, or taking away from the taxpayer, I think those days are gone now, because a large component of our taxation is now shifted to GST. Uh, if you're not an income taxpayer, you're still paying tax through GST. So that base is much bigger and much larger, and that is their simplification is more the important issue. The Finance Commission report, I think, is particularly important, because when we talk about capital expenditure and we talk about the government's capital expenditure, it only happens via states. And the 15th Finance Commission report, this particular report, is trying to transfer a large part of that expenditure, almost 21,000 odd crore, to cities, where city-urban infrastructure will be developed. So this is for the first time that municipalities across the countries will have a direct allocation of funds from the central government. This, I think, is a complete departure from whatever we have seen in the budget structure in the last 30 years of our coverage of budget. So there are fundamental shifts now which are already in place, and some of them will now play out in a speech, Vivek.
Sure. So, I mean, the sense I'm getting from the panel right now is that there is clearly no doubt about the fact that she has to enhance expenditure. There are multiple schemes that were announced. They have to be funded. Nalin made the point about defense. We do have a standoff, with a big neighbor going on. So obviously defense spending, healthcare spending. So expenditure is going to go up. That seems like a given. The question really is, where will the money come from? And before I get into that, two of the panelists made the point that there's very little elbow room for any cut in taxes. Rakesh, on the other hand, you were very hopeful there will be a cut in taxes. Do you think she will have the ability to actually cut taxes?
See, academically and as a pure economic perspective, you would like to say no. But we have to be different this time if we really need the resurgence and the resilience that my friend Yatish was talking about. We need to go for the mantra spend, 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 so that the bottom of the pyramid India gets a life, a new life, a fresh lease of life. And then ultimately they begin the saving and then the investment paradigm, which in turn gives the huge momentum to the India economic growth story. I think the PSU disinvestment roadmap we've been hearing for the last so many budgets. We need the road, cut out the map. So, we need to be, very, very bold with that. The markets are at a dizzying high. We need to go to the market right away with the listed entities that we have identified. Air India has been
You put up a story recently, right? Of
Yeah.
something you wrote some 25 years ago about
25
Air
years,
India, and
yeah.
you're still there.
Yeah, I
right?
mean,
Nothing's
I wrote a
happened.
story about Air India, Tata's trying to get into Singapore Airlines and getting into Air India. 25 years ago in the Economic Times, we are still there, and, the tender and the EOI. I think the bureaucracy, has a role to play, but it also has to, move to that minimum government piece. If we don't do it now, we'll do it never. So divorcing the key plank of not spending much will lead us to nowhere. So Nirmala Sitharaman has to get away from this fiscal deficit gyan that all of us, including editors and economists, have been giving her all these ages, and forget about all those economists and say that, we'll spend, we'll print more money, but first let's give a new lease of life to Indians who've been hit badly by COVID. Rest will follow. As all other panelists mentioned, that there's so much,
So you're saying she should spend, she should also give tax cuts and benefit, and never mind the fiscal deficit.
In fact, I would love tax cuts, but if she's not able to do that, she should not bring out any additions.
That's a very important point, because I think the cues that one is picking up from the stock market at least is that please, for God's sake, don't bring additional taxes.
I would say that,
we're going okay.
Yeah.
We'll find a way, as you mentioned, whether it's IMF, our economic survey says in a couple of years we should be back to pre-COVID levels. But do you believe, Nalin, that any additional tax, and there's been a lot of talk around, will there be a estate tax, will there be wealth tax coming back, are you going to put an additional cess, a COVID cess? Do you think that might go down quite badly with the market.
So 2 points on that. The first is if you step back from this for a little bit, I think the Prime Minister has said recently, and I'm just paraphrasing here, that this budget is a continuation of 2 or 3 other budgets this year. So in that sense, you could, depending on how you read it, you could read it as a way of also lowering expectations a little bit. This year, you've seen a major, and I think Yatish pointed out, if I'm not wrong, that there's been a massive expansion of direct benefit transfers this year, especially from June onward, with a couple of the schemes that Yatish mentioned, and that welfare net of which has been called the new welfareism, if you like, that significantly expanded. Now there is, as other panelists have pointed out, there is less elbow room and so on. I think the political context here is important. At a time when you have farmer agitation, which is still not being which is still on the streets, the middle class support for this government is very important. Along with getting the section of farmers who are against the government to get them back on their side. Don't forget, a major part of the rise of the BJP politically has been because farmers, Dalits and tribals in large sections moved to the BJP, outside of the traditional core bases of the BJP. So at a time like that, in the urban areas, in the middle classes, this is very important. Now, last year you saw major issues on income tax, you saw the new system and so on. Yeah. On the very specific point of taxation for middle classes, I would suggest, I would be surprised if there are major new SOPs. But you could see some small SOPs around investment savings and so on. You could get some more taxation, but I think where, like Rakesh pointed, the point on disinvestment is very important. Where do you get money? From a global point of view, the government is fortunate, interest rates are low globally, so that's a good position to be in. In terms of getting more money, the disinvestment targets, we've all been writing the same story for 25 years. Absolutely. Rakesh has been writing it slightly longer, more longer than some of us. Yeah. So he knows this better than anybody else. Whether it's Air India, whether it's others, you need major disinvestment, and not the disinvestment of the kind where one part of government disinvests and the other part picks up, which has been the story so far largely. So you need serious disinvestment, and that's where some of the monies will come from.
In fact, the government lost out on a very major opportunity the last 6 months, where there was this massive rise in the Sensex and the markets were doing well. It could have done so many public offers, but we probably going to end this year with not even 7% of the target of the disinvestment target. Badri, you've been writing very extensively on disinvestment through your career. Can you throw some light on what is it that can be done so that it's not just a number, in the budget anymore? 2 lakh crore it was last year, 15,000 crores what we've got to, and this story keeps playing out year after year. There might be an odd year where we've actually met those numbers in reality. When the question comes about how do you bring in the money, is that a very major route, according to you, this government will focus on in this year?
See, Vivek, the last year's budget was about 30.43 lakh crores. Normally, in the last 22 years that I've been covering budget, normally it is about 8 to 10% is the increase in the size of the budget spending. So even if you take a 12 to 14%, this should not cross more than 34 lakh crores. Now, the big question will come from the question that you have raised, that is, where will the money come from? Last year, we had a borrowing of about 8.96 lakh crores or something. And now we are touching about 12 lakh crores as the borrowing in this financial year. Well, now, will this be the basis for, doing the borrowing part or not is the question. My guess is she may either stick to 12 lakh crores as the borrowing or little lesser. That could be around 10 lakh crores should be the borrowing. Well, now, if leaving the borrowing aside, now the disinvestment part that you are talking about, which is going to be obviously the biggest non-tax revenue that the government should be expecting. Now, last year, of course, this financial year, they have missed out on a big opportunity of where they could have disinvested in a big way, but that did not happen. But still, they have 1 month headroom. Means before you finish the financial year, March 31st, there's possibility of once some amount of IRFC has been listed and one or two shares buyback offers seem to be on the table. Though Air India has moved on to June. Now, LIC, what will happen to LIC issue? So these are things perhaps a clarity needs to be or may be provided by the finance minister. Last before year, if you see the numbers, Vivek, out of the 80,000 crores or 82,000 crores, she hit beyond what was budgeted for. I think it was 86,000 crores, if I recall, is what she got from the disinvestment. And this year, she may keep it at the 2 lakh level or even lesser. I don't think she will go beyond 2 lakh crores. Even hitting that will be a huge, gigantic task. But if disinvestment has to be, timing is very important. Timing needs to be maybe next 3 months or so. If she can do a lot of disinvestment, perhaps that will be the best thing where the money will be coming in from. Because as I said earlier, the elbow room from the available tax basket is very limited. So you need to find new ways of bringing in money. But the good part is the latest GST numbers is that last month it is about that is January, it is about 1.20 lakh crores. That means there is the revival part is slowly happening and your GST collections are improving. But that is not enough to fund if she's going to present a expansionist budget. Adding to what Yatish was saying about recovery, resilience, and resurgence, I have my own terminology for it. Rebuild the economy, revive the economy, reconstruct the economy, and resurrect the economy. So these 4 R's can be added into what Yatish has already listed. And in the case of direct benefit transfer, the latest numbers is about 116,000 crores that has been transferred to the Kisan Samman. It went beyond 5,000 crores, that 75,000 crores that it was initially budgeted for. That is precisely why you have a larger borrowing. So now the issue is disinvestment will be a big question mark, as many of us have discussed. But my guess is already on the fiscal deficit front, I do agree with Rakesh in part that 3.5 and 4% need not be insisted upon. And already, anyway, you're going to hit 6% this financial year. Maybe retaining it at that level perhaps would allow her to bring more money in terms of using the lower interest rates globally to borrow more money either directly or through public sector companies or even the municipal corporations. Many of them have gone for direct bond issues and things like that. So that could be one way of doing it. My guess is money mobilization cannot be completely centralized at this point of time. Slowly states and municipal corporations also need to mobilize funds for development projects.
Sure. Nalin, you want to make a quick point?
Yeah. A little bit to what Rakesh and Badri were saying. The first is that yes, there is less fiscal room, but you do need major spending. On that, on the FRBM, I think the thing to watch out for is that the monetary framework. It expires on the 31st of March this year. So we should expect to see what indication the government has on the framework exactly. And I think you will see some adjustment on that. It is very important to spend more, and I agree with Rakesh simply because I think the word animal spirits was mentioned here before. Your corporate profits, corporate investments have seriously declined in the last year and a couple of years. If you do, you've seen a major change in corporate taxation earlier in September 2020. So therefore, now you need a stimulus of various kinds, and especially signaling. I think the optics of what she'll say is very important as much as the numbers of what she's going to put on the table.
Vivek, just 30-second lighter note. We heard about 3 hours, Raghuram Rajan, the man. Now we have 8 hours. He should be a happy man today. We doubled up on 3 hours, and Raghuram Rajan has a reason to smile.
Sridharan, let me come to you. You've tracked corporate India very closely, and the points that the panelists made, Nalin just made as well. Even before we went into COVID, we grew. The revised numbers that have come in were at 4%. The whole capex cycle, which we've been talking about for years, that it needs to turn, the animal spirits need to be unleashed, hasn't happened. What, according to you, can the finance minister do in this budget to actually get that capex cycle, the consumption cycle kick-started? Sridharan? Shri, if you can unmute yourself, because we can't hear you.
Sorry about that. I didn't realize I was on mute.
Yeah.
So
if you can just
absolutely
start
right,
from the
Vivek.
beginning, because we missed a bit of
Yes.
your answer.
Yes. So what I was saying is that you're absolutely right. Even if you look at the credit offtake in the private sector, it has been very muted over the last several years. It's not just like 1 or 2 years. It's been muted for the last several years. So the private sector has not been undertaking any large greenfield investment. Why? Because there's a overhang of existing capacity already. And if you look at the automotive sector today, it's a classic example. Fundamental shifts happening in terms of technology itself. People are now questioning, and with this whole work from home culture, people are actually asking, do I really need a car? So government needs to actually give confidence to corporate sector. It needs to give confidence to consumers for them to start spending again. So it is very important. So which is why I believe that just cutting corporate tax is not the solution, because it is not a win-win solution. It's a lose-lose game, according to me, because you might cut a tax, it might help the corporates for 1 quarter or several quarters, but the fundamental way in which the economy has to grow is by consumption. And India is a country of 1.3 billion people. I mean, if this country can't grow, then I can't think of which country can grow, any other country that can grow as fast. So we have to put more money in the hands of people. And Manrega, we will see, I'm sure we'll see higher allocations for Manrega today from the FM. We need more direct benefit transfer to happen, so that the leakages that happen typically in the government system are curbed, and the money goes directly in the hands of, now there's a talk of fertilizer subsidy going directly into the accounts of farmers. That's a great idea. I think that's going to put more money in the hands of farmers. So we need more innovative direct transfer of subsidies to the end consumer, who can then go out and spend in the market. And that is how this whole virtuous cycle of revival and consumption will happen. Now, I also want to make another point on the fiscal deficit. I think 2 good things we have going for us is, one, the overall trajectory is like picking up. So we will see tax collections going up. And second, we talked about where is the money going to come from. We talked about disinvestment. I'm sure the government will be more aggressive this year than it was last year, simply because there's a greater need for money. And second, there's also 5G money, which could potentially get if the government decides to auction the 5G spectrum, and if the government decides to ask for the AGR to be brought in on a timely way, that will also help. Plus, there's the RBI dividend which would come in. So I don't think there is a huge stress on the fiscal deficit, which is why the FM can go ahead and up the expenditure 8 to 10% or 10 to 12%. That's the expectation. So she can do that. But at the same time, I think it's very important to keep an eye on fiscal deficit from the market, from the financial market perspective, because we don't want to become a Venezuela or a Zimbabwe. It's very important. And I believe that instead of sticking to one number as a fiscal deficit target, the government should say we're going to operate within a certain range. And it should work on marketing the fiscal deficit number to international rating agencies. Now, that's something we haven't done very well. If we can do that well, I think we'll have enough room to raise money and make sure that we give a good COVID shot to the economy to get it back on its feet.
Yatish, your thoughts on disinvestment, on fiscal deficit? What can be done on that front?
So, as I said earlier, Vivek, I don't think so. The concern is anymore around fiscal deficit. I I think the finance minister will be more than eager and keen to kind of extend the FRBM, and I foresee that the fiscal deficit will be as much as 7.5 to 9% at least projected for the coming year. Uh, for the current year itself, it will, I think, go up because of the fall in revenues. It will go up to at least 7%, if not more. So there is a tacit understanding, I think, even among finance ministers across the world and among global rating agencies, that they have to give a leeway to countries, because this is a once in a lifetime or once in a century kind of a incident, that the pandemic, and the same norms as they were applied earlier need not be applied. I do see a bigger borrowing plan, and I do see a lot of budget borrowing, especially some of them which has already been announced by the finance minister. She did announce, I think, a 3 lakh crore plus borrowing plan for the state governments who are actually the driver of capital expenditure. As you know that a large percentage of the central government expenditure goes into interest payments, salaries, pensions, and maintaining the existing system. So capital expenditure basically therefore goes to the states are doing it now, and therefore any borrowings by the state directly or indirectly, I don't think so will crowd out the older concept of the private sector, because the private sector, one, has not been borrowing. If you see the credit growth from the banks, it's been actually been falling rapidly. The large borrowers are not borrowing because of, as pointed out, because of existing capacity. They don't need to build new capacity. So if the government borrows, and I think that is where we need to kind of change this concept of borrowing being something bad to borrowing being good, especially borrowing by the government. And we should stop looking at spending by the government or expenditure by the government as if, and this question of where the money will come from. You see, we must understand one simple fact, which the rating agencies have fooled us into believing, is that as a sovereign currency issuer, when the government borrows, the government is basically transferring one set of expenditure from one end to other. It is not going to, and as now the government is the only investor, is the only one which is making capital expenditure, we need to change our mindset about where will the money come from. Well, the money will easily come from borrowings, and there is enormous potential for new instruments. There is a chance and opportunity for the finance minister to launch instruments. We've launched instruments in the past. Some of us remember the millennium bonds, which SBI had issued at a fairly attractive interest rate, both for the NRIs and for the global investors. There is enough saving potential in the market which is not being tapped. It's going into fixed deposit. It can be channelized into infrastructure bond, which has long-term tax benefits. So all these borrowings will, enable expenditure to happen. And for at least for the next 2 3 years, we have to change our thinking away from fiscal deficit and away from where the money will come from to where the money is going to be invested and by whom. And my belief is, and a lot of economists, particularly the modern monetary theory theorists, they've been saying that in these times and pandemic times, there is a need to change this thinking of how sovereign issuers borrow, and why borrowing by sovereign issuers is not going to increase interest rates. Yes, they should watch out for inflation so that the spending is not increasing inflation, it is going into assets. the liability is being matched by an equivalent asset, and the asset is infrastructure. And there the choices have to be made. There the choices have to be made by the central government. The choices have to be made by the state government. And now those choices have to be made by the city governments also. You see, for the first time in this budget, we will have, if we start allocating money to city government, we will start seeing a resurgence of city-based infrastructure, which, as all of you us know who live in cities, is one of the biggest bottleneck for growth. And hence any improvement in quality of life in these cities will automatically have a salubrious effect on economic growth. You know, we talk about and why I'm kind of Vivek, I'm not ignoring your privatization or of public sector, but I think that's a very minor point in terms of, if you look at it from the point of where the money will come from, because a rising market does not necessarily means that it will absorb bad paper. Okay, till such time the companies which are divested with the intention of giving management control and are good companies. You cannot sell bad companies even in a good market. You can only sell good companies. The reason Air India has not been sold, and it's not, I don't see it only as a bureaucratic bottleneck. I mean, the fact is that it has such a large debt overhaul on it, I mean, overhang on it, that who will buy it? And what will they buy it for? So the question is that, there has to be a buyer at the other end. And the market is not
going to stop you there. We've pretty much run out of time on this show, but let me just close with 2-3 quick rapid fire questions for each one of you. The first question is, do you still have butterflies in your stomach before every budget like it is today?
Yes, of course, Vivek.
You have reason to.
I have reason to. I have an additional reason to. This is my first budget in that sense with Money9. Just one little prayer to Nirmala ji. कृपा करके ये जो बजट का स्पीच की अवधि है उसको कम कीजिए और उसकी जो शब्दावली है उसको एक आम आदमी से जोड़िए. ये बहुत महत्वपूर्ण बात है क्योंकि बजट इज अ वेरी की पॉलिसी डॉक्यूमेंट. Unfortunately, decades we have witnessed budget coverage. It tends to get more and more jargonized. We need to crack that because budget is for the Aam Aadmi, not just in television headlines, but even in the budget speech.
Okay, you took away my second question. How long do you think she's going to speak for today? Nalin?
I discovered yesterday that the first budget of India in colonial India, the first official budget speech was actually written by the founder of The Economist. Okay. And about 17 years after that magazine was founded. Now the point is that if you think about when Mr. Modi first came into power in 2014, a lot of people saw him as a Reagan, as a Thatcher, of a reformer of that kind. The first 5 years of Mr. Modi have shown a leader with an economic philosophy which is slightly different from that. So if this budget, if there's a time to revive the animal spirits of the economy, this is the time. And that's what we hope that this government will signal the optics around that.
Badri, do you think this budget will take you back to 1991 or the dream budget of Chidambaram?
My guess is, like Chidambaram had earlier quoted Tiruvallur in a big way, in a poetic sense, my guess is she will go for Chanakya's Arthashastra as her basic principle of, only taxing the way that is required. Only limited taxation may be the issue. And second part of the story will be that, she would go high on the optics, like, Atmanirbhar Bharat and the budget for New India or Aspirational India, that kind of thrust may be given. In this sense, I don't think there will be many negatives that we can be looking for. And my guess is that you may not think of, 92 or 93 as the, benchmark. And then she will set her own benchmark in terms of either for the markets or for the individual investors.
Okay. Sridharan, do you see additional taxes coming?
Well, I'm keeping my fingers crossed, Vivek. I hope there's no COVID surcharge that everyone is talking about. But even if it does come, it might be on the bulge bracket earners. But I think there's a tremendous pressure on the finance minister, and she's very aware of it. The only thing I want to see in this budget is the government coming out on a strong, putting a strong foot forward and saying that we are for once not going to worry too much about fiscal deficit. We are going to increase our spending, and we are going to clean up a lot of red tape that affects at the ground level. That itself is a huge thing, and resort to innovative financing of some large projects where you're not directly leveraging the government balance sheet, but you're bringing in innovative mechanisms, innovative institutions to come and kickstart these projects. So I think a little out of the box thinking from the FM on these issues can really put us back on a strong growth wicket, Vivek, I think.
All right, we leave it there. Thank you very much, all of you, for coming by. In minutes from now, she will present the budget, and we are, of course, here at Money9 tracking every development and analyzing it for you through the day and even beyond. Thank you very much for joining me in this session. Thank you.